There is no middle ground in today's housing market.
We started seeing a climb.
Sales of existing homes rose sharply.
So the homes that have been selling are at a higher price.
Let's begin.
All right, in 3, 2, 1.
It's time to cut through the clutter.
Refinancing your home loan.
This is your source for the latest real estate and home financing news. You can actually use.
My prediction is that most predictions will be wrong.
It's the Market Snapshot.
Going live.
And now, here's your host, Dan French.
Welcome to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to mortgage specialist here in Las Vegas. And I'm in studio today with Chakits ITZ Krulsawat from Simply Vegas.
Yeah.
Chuck, what's going on today, Chuck?
Just rolled out of bed.
Welcome to Market Snapshot. I just want to let everybody know, listening to the Market Snapshot is dedicated to helping you as a consumer to the best path to home ownership. We offer up-to-date content on the ever-changing Las Vegas market related to financing and real estate. What will happen in the economic trends this year? All signs have 2016 pointing to a strong upward gains in the housing market. Fannie Mae, a government-sponsored entity, showed economic slows at the end of 2015. So what makes economists optimistic this year? Consumer spending, the housing market, and the strength in the residential investment have steadily been getting better. Still, concerns on deteriorating financial conditions and global economic concerns are a constant over the past few weeks. The question is, where will this lead us? To financial freedom or turmoil? Stay tuned to the Market Snapshot. We're going to give you up-to-date information throughout this show and upcoming weeks on where the 2016 year is heading in the housing market. As always, it's a pleasure and a privilege to educate the Las Vegas community. And coming up this first hour, we're going to talk about housing market statistics. We're also going to go over interest rate trending. And stay tuned for the second part of the hour, the second half of the hour. We're going to talk with Eli Segall from the Las Vegas Sun about some events and things that's going on here in Las Vegas. So let's go right into the market rundown. You ready for this, Chakits?
I'm always ready.
I knew it.
So, honey, what are you going to rant about today? Can we get a little preview?
It's the Market Rundown.
As always, we're going to start off with financing, news and events, housing market statistics. Chuck's going to go over that. We're going to go over interest rate trending. Eli Segall's back from the Las Vegas Sun. I want to talk to him about a couple articles that he wrote about. And we're going to see how long this refinance party is going to last. And call right now into studio if you have any questions financing real estate. Our talk and text lines are open. You can reach us in studio, 702-257-5396. Again, that number is 702-257-5396. You could text me 6682 to 55,000. We'll set you up on a free home search tool. It's called CQ. It's an IDX tool, which is linked over to the MLS and everything, all the properties that are on the MLS, all that information that's on there, it'll come through in a text format. And again, Chuck, what you got any? What's going on with you today? How's your Sunday going?
My Sunday's going great. Well, actually, you know what? I'm lying. I actually woke up this morning. I wasn't feeling that good.
Why?
I don't know.
What happened, man? You were feeling good last night?
I was. I think I just overworked last night.
You hung over?
No.
You sure?
Yeah, I don't drink.
All right. So you're just feeling under the weather?
Yeah.
All right.
But I must troop along.
You must troop along.
Don't have a choice.
You're going to get all these emails now that says, oh, get better, get well. Here's some remedies for trying to get better.
Mm-hmm.
I know how that goes. They're going to get one that says apple cider vinegar. That cures everything. Yeah. Just go drink a bucket of that and you'll be good.
Just a bucket of it, huh?
Also, let's go over some news and events. Chuck, you got any news and events for me? I want to hear something different.
Hear something?
I want something.
You want something different?
Give me something.
Well, the paper wrote in the other day regarding Village at Tule Springs development. Are you aware of that?
Tule Springs. Oh,
yes.
yeah. I've been there quite a few times. Is that museum, or not that museum, but that?
No, it's a national park, buddy.
Is it? I thought it was that. Don't they have like pets and stuff, or like a zoo? What is that called? Spring Reserve.
You're totally off, dude.
I thought that. I didn't know what it was.
Well, there's actually a new master plan community coming into the North Las Vegas Valley. Village at Tule Springs, 2,000 acres.
Wow.
They're saying that for the next 15 to 20 years, it's going to bring in $3.3 billion. And this is actually out here located on 5th Street and the 215, which is on the north side of town. Basically, they are moving forward this development because a lot of people are flocking out to Green Valley and also the Summerlin area. So they're trying to make a new development out there.
Right.
Now, this place was actually created by a developer a few years ago. And we actually had this discussion with Eli. And I believe it was called, what was the name of the... Park Highlands East and Park Highlands West. Remember in 2006 where they had this master plan community, but everything came to a halt?
Right.
Basically, Park East sold to these developers, and what they're going to do is they're going to build over 2,000 acres, and they're going to have over 2,400 jobs that are going to actually be produced. Homes are going to be selling from 200,000 all the way up to 270,000. There's actually going to be a total of 4 phases: Northwest Village 1, Northeast Village 2, Southwest Village 3, and Southeast Village 4.
I got a question.
Yeah, go ahead.
So you said North Las Vegas.
Correct.
Is the new home development, they're going to be putting guns into their purchasing homes? Because you might need that, right?
Now here's the thing. When clients call me and they say, hey, I want to be in this location, I don't want to be in North Las Vegas or Las Vegas, there's such a stigma to North Las Vegas.
Chuck, just tell them to throw in a Glock. You're good.
Bro, you about to get fired.
Just like,
I mean, you got Aliante, you got Centennial, you got Sky Canyon. There's a lot of new development coming out there, and the mayor's trying to grow that population out there. I mean, you still got the the VA hospital. You got that new electronic car. What is that car company that's going out there? Faraday or something like that, where it's another 1.1 billion.
Right.
So I mean, the economics out there is going to expand and grow in the near futures, and that's actually something to look out for.
Absolutely. I think North Las Vegas. I'm just playing. North Las Vegas, there's really some nice areas. I mean, every area's got its ups and downs.
Well, there's pockets, you got to drive through. But once you pass those pockets, you're like, man, this is a whole nother world out here.
I think building a new home development out there, they're probably going to be pretty secure. They're going to have, obviously, fences and things, or it's going to be gated, probably, I'm assuming. You know, and so I don't know. I wouldn't worry too much about it.
Well, they were saying that they're going to be building about 8,600 homes.
There you go.
Which is going to actually include senior living, 2,000 of them, which is, I think it's very good.
Wow. Senior living.
Senior living.
They're going to have security guards and everything, probably,
But here's the thing I don't understand. Are we actually overdeveloping? Are we actually overgrowing? Because, I mean, you got 8,600 homes here. You got Sky Canyon, another 10,000. You got Cadence, another 15,000. I mean, you got Inspirada, another 10,000 homes. I mean, do you think we're actually overgrowing with our population, less than 1.1 million? And that includes, Boulder, Las Vegas, Henderson, and North Las Vegas?
I think there could be a concern for it. I know that in the boom and everything that happened after the boom, obviously there was properties and homes that were not being sold. There were some developments that didn't even finish developing what they were constructing. So I think that could be a concern, but I don't think that they would make this consideration if they didn't feel that the market and the economy was slowly going up and the supply was there with the demand.
Yeah.
And so I think it's going to actually probably going to have, we're going to have enough people to buy them. My concern is where's the prices going, and is it going to be high enough where everybody can afford one? Because new homes, I mean, you got the average new home right now is what?
$330.
$330.
Yeah.
I mean, there's some out there that are down in the 200s, low 200s, but still, that's a big payment to some people. I mean, our wage.
No, it is.
It's a $1,200 or $1,300 payment. On some of these, for some of these people, and if you're not renting in that area or that price point, then it might be a problem, and you might have to figure out, well, maybe I should add somebody to my loan, or how do I get into a home, or do I got to just stick renting? So I do think it's going to have, like I said, the supply is going to meet the demand, but we're going to have to obviously look at the fact that we're going to have more renters coming into the situation. It seems like a lot of people, we've talked about this, everybody still has the idea of renting.
And the numbers have dropped. We'll definitely get into that. But what I'm starting to see with new home developments is that a lot of these lots are not being sold off, and a lot of people can't pull the trigger on these homes.
Right. Got anything else for me?
What do you got?
Well, I could tell you that man in black tribute to Johnny Cash at Suncoast today.
Johnny Cash.
Oh, Johnny Cash.
Is a burning thing.
Look at you over there. Hey, did you bring your boots?
I brought my guitar.
You should have harmonized with him. Also, the Bridges of Madison County at the Smith Center. This is going on from the 23rd to the 28th. You might want to check that out.
Yeah.
Margaritaville will be celebrating National Margarita Day tomorrow.
So is that free?
Woo. You like that margaritas right there, that sound?
This song doesn't go with the margarita song.
Hey, listen, it's not about that. It's about feeling good.
Feeling good?
You get about 3 or 4 in you, you're feeling good.
You drink margaritas?
Oh, of course.
Strawberry?
Extra strong. Extra tequila.
Extra tequila.
That's what
extra
you gotta...
to kill you.
You're about 4 deep. That song sounds real good. You'll start wearing those feather hats.
There you go.
Every Monday, service industry employees get to the CEO treatment. 2-for-1 drinks at the Round Bar and 50% off of the buffet going on at Rampart Casino.
Nice.
You like that?
Yeah, I do.
You can go over there and get that CEO treatment. That's
there
what you
go.
want, that CEO.
The CEO it should be free then, right?
That's all you want. You just want to pop in and floss everything you got and be like, yeah, I'm here. And then you're like, where's that free buffet? Shifting gears to capital markets, it is important to know other countries securitize and offer up their residential mortgage-backed securities. Japan's are arguably much safer than ours. Did you know that?
Mm-mm.
Yet supposedly banks are abandoning the government-backed mortgage bond security because the Federal Reserve quantitative easing has narrowed profit margins. So that's something to look at.
So what does that mean?
Basically, the return that they are getting on those mortgage-backed securities, they're decreasing the amount that they're trying to sell. And I think at that point, you're going to see that the Federal Reserve, which is the Bank of New York, reported that 62% of the Treasury securities are traded over the phone now.
Wow.
Compared with 24% of currencies. So you're looking at Treasury securities I think when you look at it, we've talked about this, going and getting a Treasury versus mortgage-backed security, there's still, the Treasury has they kind of go in hand in hand.
Yeah.
But the Treasury itself it's a more of a secure yield.
Yeah.
And so a lot of people put their money into those, especially right now.
Because everybody's getting paranoid.
I think so a little bit. Just not paranoid, but they're looking at there's not as big a return for the mortgage-backed securities as there was because of this quantitative easing.
So are you saying the market is a little bit unstable and people are just a little bit kind of sitting on the sidelines and pulling back a little bit?
I don't know if it's unstable. I think it's more of it's going through its cycles. And I think right now the cycle is you're not getting as good a return. If you're an investor, which a lot of people out there are when they're talking about mortgage-backed securities, then yeah, I mean, it's going to be something you're going to take notice and probably pull your money out, maybe put it into something else if it's not as attractive as other things that you can invest into.
So they're just moving their money and storing their money until a different asset class comes in where they're interested in, then they'll move their money towards that asset class.
Absolutely. And here's the thing. They said they linked it to quantitative easing, which has limited the amount of return that they're getting on those. So, and how about these rates? Plenty of lenders saw a great lock-in weeks of last week. Man, rates are great. Have you seen what rates are doing right now?
No.
I mean, I'll tell you, rates are probably in the mid to, I would say the high 3s.
FHA?
To low 4s. FHA, VA, but like conventional is probably going to still be in the low 4s. But the idea is that these rates have not been this low since 12 months ago, meaning this is like the season, right at the beginning of the year, just like last year, rates started to get good last year. And I thought, well, it's going to go away. Now it's come back again. And I think it's phenomenal. I think last week, the week before that, I've had a lot of people come forward and try to get refinances done with me because they're saving, even if you're saving $100 to $150 a month, they're now thinking, well, the rates are going to probably go up. They were talking about raising rates 3 times this year.
Yeah.
But it might only be 2 because of the market and how the economy is not doing as well as they'd like. But the reason why I'm saying that is I've had a couple people come in last week. They're refinancing with me right now and saving $200-$300.
So let me ask you this. How is the rates at 3 when we raise interest rates and the rates are going down? Shouldn't it be the opposite? Shouldn't we be going up on rates?
Well, the rates they had, like we talked about, in December, they raised the amount they're going to lend to commercial banks by a quarter of a point. Now, every indication to me was that they're going to raise rates.
Yeah.
Well, the global economic situation, including oil, the thing that's going on with Japan, and some of the things that's going on with China has really kind of put everything kind of at a standstill, and they're just not secure enough here to start raising rates. And this is an artificial market. Everybody thinks it's not. Yeah, it does indicate, we have things that's getting better. Employment's getting better. The overall economic picture here in the U.S. is getting better, but we're still not where we need to be. And again, this is a global economy. You got import and export going in and out. That does affect us.
Now, if I'm someone that just tuning in, listening to this show, what you're saying is kind of getting me paranoid. Should I be buying a home?
I don't know, Chuck. What do you think? Do you feel like you're got a return on your investment? Of course, if you're in a position to buy a home, I would say yes, and I'm going to tell you why. Because right now, rates and money is cheap. And everybody always tells me, well, when is this going to happen where rates are going to go up? Yeah. Who knows? I don't know. I can't see the future, but I can tell you I'm constantly looking at it. And I could tell you that rates will go up at some point. They're talking about doing it 2 times this year. If you're saying, you know what, I got a $1,300 rent payment, or I can go out and really I can buy a $1,300 mortgage and get a $1,300 mortgage on a monthly basis. Yeah. Well, you're going to get that tax write-off incentive at the end of the year. You're going to get to, like we talked about with Greg, you're going to get those taxes that you can write off with whatever appliances you buy within the home, including you can write off whatever we charge as an origination, which is, what Nova Home Loans charges, because you can go down and say, look, this is what they charge me to get the loan. These are all tax write-offs. And I think at the end of the day, you're really going to have a less payment having a mortgage. Now, is it always going to be that way? I don't think so. But I can tell you that, if you haven't started now on the process of getting, thinking about purchasing a home, doesn't mean you have to, but I would definitely consider it. If you haven't refinanced your home, I would do this anytime. I would call anybody and say, you know what? I need to find out if I could save money. And if you can't, you can't. I'm not going to put you in a position where you can't save money, but you need to call your lender or me. I'd like to talk with you personally and say, you know what? You're either right on the cusp of getting and saving enough money to make this happen, or you're not. And if you're not, then guess what?
How do you make that determination? Like, hey, you know what? I'm saving this much amount of money. Maybe it's time to refinance.
There's a lot of factors, but you have to look at one, if you've already been paying on this mortgage for 5 to 10 years, it might not make sense because now you're starting over on a new 30 year. Now, if you're saving $200 to $300 a month, and let's say you don't plan on staying in the home, people move 5 to 7 years, that might make sense. If you're a person that comes in with different goals, I want to save X amount of dollars on a monthly basis, everybody's got that dollar, that dollar point of where they're going to say, yeah, I want to go into this and save this amount of money, then I can make it happen. But at the end of the day, if you're going to save somebody $50 or $60 to go through all that process and then what the cost is to get the refinance, it might not make sense.
Okay.
Also, Freddie Mac, the U.S.-controlled mortgage firm, will pay the Treasury Department $1.7 billion at the end of March after reporting net income of $2.2 billion for the fourth quarter.
Woo!
That's crazy. The company, which was seized along with larger Fannie Mae during the 2008 financial crisis, will have returned $98.2 billion, including the March payment, according to the regulatory filing Thursday. The housing market is looking relatively good, and the uncertainty will be the key factor here in the market in 2016. So you want to take a look at that because it sounds like they're recovering. It sounds like obviously they're getting profit, and that's what everybody's looking to get. There was a point at one, we talked about this about a year ago. Fannie or Freddie was going to maybe pull out of here. And I told you on the radio, I said, you know what?
You ain't getting a loan.
Well, that could be a problem because guess what? They're giving you opportunity with, getting a lower down payment.
Yeah.
You come in at 5%. That's a lot better than 20 or 30 or 40% down payment, which, in other countries that does happen. So that they come in, you say you got the mortgage insurance that they can help you with. That really solidifies getting that. But if they pulled out, well, now it's an individual basis where now you have, I'm just talking about here in Las Vegas, but now you have an individual bank that would be making and determining how much money you have to put down. So that's a big deal, Also, we reach a crisis of investor confidence or a crisis of any other kind. Let's talk about TRID and the flaws. That's Tiller Respa integrated disclosure. That's the new regulations that came out on October 3rd. And there's been a flurry of people saying that, one, they're not putting on TRID, on the loan estimate, they're not putting the FHA upfront mortgage insurance premium. And they felt at the CFPB, Consumer Financial Protection Bureau, that that's not necessary, or that they just want to give the loan amount, not the base loan amount versus the total loan amount.
I would prefer the total loan amount.
Yeah. Well, I would too, but I guess it's not important. So as a lender, when you're working with me, if it's an FHA loan, I'm going to instruct you that here's what your total loan amount is. That's been something that's come up. Also, with the new TRID regulations, there's been a lot of lenders, even here in Las Vegas, that have had problems hitting the close of escrow date. And I'm going to tell you something about that.
Yeah.
They have increased about 10 days from last year to this year, about at the same point, about how long it's taking to close a loan. Now, everybody has had struggles. Don't act like I'm not going to even say that, Nova Home Loans is a great company. We've all had to go through a process of making changes. Now, with that said, by this point, you should have the ability to actually correct those at this point.
Yeah.
And I tell you, we've corrected everything that's in-house necessary to get your loan closed. I'll tell you that not every loan is going to be 30 days. It just doesn't happen that way.
Mm-hmm.
But majority of our loans are closing still in 30 days. That's including the new 3-day regulation.
Is that your average right now? It's about 30 days?
It is. And you know what? If something does come up, I'll tell you, it's getting better and better as we go, because the system and how we do a lot of things that's proactive. And I think when you look at that and you look at the big regulation change that happened, a lot of people are still falling at the wayside. They're not ready for it, or they're still not conditioned to meet or try to appease the changes, because it is affecting lenders. So you might want to take a look and see if, before you start working with somebody, hopefully you call me first, but if you start working with somebody, make sure that they can meet that close of escrow, at least, what their process is, because I could tell you that could cause you to lose some money. You're putting earnest money deposit down. They might take that away if you don't close.
So how do I get a hold of you?
You can get a hold of me directly by calling me outside studio.
Call now.
All right, info commercial. All right, 781-6682. And you can get a hold of me. Also, you can reach me in studio if you have any questions, financing or real estate, 702-257-5396. Again, this is Dan French with the Market Snapshot. Every Sunday from 11 a.m. to 1 p.m. right here on KDW and News Talk Radio. And, I think it's been very good overall, though, for these TRID regulations. I think it does help consumers, but there's still some things that need to be ironed out.
Mm-hmm.
Also, want to say that investors with cash are starting to beat out finance borrowers. And this is not happening here, but it's happening in other states.
Well, that's always a given, just due to the fact that they can close quicker. But just keep in mind, just because you're financing, it doesn't mean you can't beat out a cash buyer.
Do you think that'll ever come back here?
Cash buyers?
Yeah, well, the monopoly that they had.
I mean, they're at 30% right now, but I mean, I don't think so.
I don't think there's a market for them anymore.
No.
The values of the homes have gone up too much. Now they're hitting states like Florida, Louisiana, Arkansas, Tennessee. They're starting to hit these states, and now these are starting to really go through what we went through last year or a couple years ago.
Yeah.
This is Dan French with the Market Snapshot right here on KDW News Talk Radio. We'll be right back. We have Eli Segall coming on. We got to talk about housing market statistics. We have a whole lot of show left. We'll talk to you right now.
Get the latest financing and real estate news anytime you like. Just log on to danfrenchloans.com.
Oh, sure, I can do that.
Don't you dare go away. More with Dan and Company coming right up here on the Market Snapshot. You're listening to the Market Snapshot with Dan French from Nova Home Loans. Got a question about home financing or real estate? Call Dan now, 702-257-KDWN.
Welcome back to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to mortgage specialist here in Las Vegas. And I'm here in studio with Chakits ITZ. What does that ITZ stand for, Chuck?
It's
It's. Hey, you know what you should do?
Yeah.
You should put that on your card.
ITZ?
Just ITZ. It's with a big apostrophe. Then people would be like, hey, that's like a unique seller for like marketing yourself.
Yeah. I'm like a unicorn.
A unicorn.
Tasmanian she-devil.
Wow. All right. If you guys have any questions, financing or real estate, give us a call in studio, 702-257-5396. Again, that number is 702-257-5396. I want to say something here. You know, every show we put together, we have somebody that's always behind the scenes that's really making all this happen. He's really taken the show to a new level, and he's none other than our producer, Robert Rytina.
Oh, wow. Thanks so much for that introduction.
Yeah.
Oh, wait. I hit it myself. Sorry.
Robert Rytina, ladies and gentlemen.
No, he's good.
No, he's very good.
He actually really does make the show.
Yeah, he's a great part of it. And like I said, we've been doing this for a while now. And he's really taken, I think, the show to another level for us. And it's been good.
My question to you is, have you got him financed yet?
Who, Robert?
Yeah.
Robert don't want financing right now.
Why?
He never talked to me about it. Did he talk to you about it?
Oh, sorry about that.
Robert, who you using?
I will be needing financing when I move out of state. And I see Nova goes through other states. So
absolutely. See, there you go. We're going to have everybody under the Nova tent getting a loan.
There you go.
Let's go over housing market statistics. What's going on with that, Chakits? ITZ?
Housing market. This is where we bring it play by play, week to week. Let's start off with the single family residence. We actually have a total of 7,159 properties currently listed on the market. 87% of those are actually private sales, 10% are short sales, 3% are bank owned properties. Now, here's the thing. We run this numbers every single week, and you're probably thinking, why is this important? Well, the reason why it's important is because if you're out in the marketplace, you need to know these numbers based upon the type of financing you're at and how much you're qualified for. So that way, when you're out in the marketplace, you know that 7,159 homes are not going to be available to you.
Yes.
Because you may not fit those qualifications. So these numbers are going to drop.
Okay.
Okay. So what I'm going to do is I will break it down even further. Okay. But let's just start off with the median price today.
So let me ask this question. If I'm a consumer and I walk in and I say, Chakits, I'm really looking in this price range in this location. Give me an explanation of really how that process works. Do you break these numbers down to them?
Correct. What we do is based upon the type of financing and also what they are approved at, you know, our clients, they need to know what's going on so that way we can better prepare themselves.
Right.
They need to understand what's going on with the macro, micro level of economics and the economy and what's taking place in Las Vegas. So we sit down with them and explain to them the average household median income, the average time of somebody buying a home.
Okay.
Based upon the price point you're at, these are how many homes that are currently available, and we break it all down. So that way they understand once we start showing you the properties, these are only properties that are available. Okay. Now, out of these properties that are available, these are short sales, private sales, and bank owned. These are how the transactions work. The reason why this is also important is because if you have time to shop around, then you may want to consider a short sale because the majority of the buyers are not buying short sales. So it's really more about providing the content and getting our clients prepared within the marketplace. They don't have to be an expert, but they just need a general guideline of what's really going on, and let me do all the work for them.
Let me ask this question. If you had a consumer out there, what is the percentage of consumers that understand, first off, what a short sale is, and then what is the process of getting it approved and getting it accepted?
Now, when we sit down with our client, we break it all down from financing, bank-owned properties, how does that work? How's a real estate transaction is conducted? What are customary practices, major players in the real estate transactions, the things that you look out for? So that way, once we go out into the marketplace, we start writing offers. I literally hold your hand as I navigate you through the minds of the contracts. But every time we come to a roadblock, I give you the pros and cons and your options. At the end of the day, I don't tell you how to write the deal. I'm just there just to help you out and give you my opinion, my advice, and the things that you should look out for.
So if I was a consumer, I said, Chakits, you know, I'm at 150, which there's nothing wrong with that.
Yeah.
But I'm at 150 to 180,000. I'm looking at purchasing a home, but I really can't find anything. And you say, have you ever considered a short sale, right? How would you navigate that client on how a short sale works and what's involved on a short sale.
Well, I could tell you at 150,000, we got to go to Detroit.
What's in Detroit?
$150,000 homes. But
the
here's
Detroit
the thing.
Lions?
At that point, this is the reason why we educate our clients, is because the clients need to know what the median price point is just to get in to start looking at homes. Now, there are some homes that are under the median price point, but if you're looking at 150, these homes may not exist, and we got to look at townhomes and condos.
Okay.
I only can sell you what's currently available on the marketplace. Now, as far as for a short sale, once we actually sit down with our clients, we go through the process of step by step on how every transaction works. So that way they know the time frame, they know the situation, they know how things work. Again, so that way once we're back out in the marketplace, when they look at a property, they know it's a short sale, they know that this thing could take up to 6 months and it may not close.
Right.
And that's why part of our strategy is what we do is once we tie them up into escrow in a short sale, we're still looking at other properties because there may be a bank loan or a private sale that I can close them on,
right,
and we can, move in within 45 days and we pull our money out from that short sale.
Let's put an example of what we've done. So we have a client, we're not going to name names, but we had a client actually come in and got a short sale. Okay. The reason why she got a short sale is the price point, and you got her into it. And then it was a 3 or 4 month wait.
Yeah.
Now we're in contract. Now where it's final approved. Now we're getting ready to close on this thing. I'm going to do a testimonial with her. But you know what? Everything that she's received, or that client has received, has been very, very, not just on top of things with us on both ends, but it's been very efficient. And I can tell you, would she have gotten a home as a townhome or a condo? Maybe.
Yeah.
But I can tell you this, she got into a short sale, waited a few more months, but she really got a house that she wanted.
Exactly. And
that's important.
Well, that is because the position that she was in, she didn't have to buy a home. She wasn't eager to get a home within 45 days. And if you're in that position, you're going to have more choices as far as for short sales, because short sales are taking about 120 days just to move. That's their moving average.
Yep.
Because, again, everybody wants to move in right away within 45 days.
In case you're just tuning in, this is Dan French with the Market Snapshot, KDW and News Talk Radio. If you have any questions, financing and real estate, you can give us a call in studio, 702-257-5396. Again, that number, I'm going to throw it out here again, 702-257-5396. I want to give you we'll answer any questions you have, financing or real estate. Go ahead, Chuck.
Single-family residence, the median price today is at $225,000. Last week was $228,500.
Wow.
The reason why it's fluctuating like that, because this data is pulled on a weekly basis.
Will it ever go to, say, 225 now to 250?
It just depends. Next week, there could be a lot of closings at 250.
And then that's what happens.
Yeah.
So,
but you have to understand that because we are breaking it down week by week, the data is so large. But if we calculate on a 30-day average, it's around 220.
Okay.
Okay. So if you were out in the marketplace last week, you were paying $225,000. So what that tells you, from 220 to 225, you had to be aggressive with your offer in order to get your offer accepted.
When I got into this business, things changed quite a bit, pretty rapidly. But the reason why things like a show like this is so important, one, not only is this a good resource for people out there that maybe they're the baby boomers that didn't have resources like this. Maybe are just not on the internet and doing research and things like that. It's great for that. Also, it does give you insight on a weekly basis.
Yes.
Versus everything changes so quick in our professions. Real estate, financing, it changes every week, really daily. But that's good because they know where it's trending. And I think the important part is, where are we at? Not necessarily where we're at. Where is the trend heading?
Correct.
And I think that's important.
Man, you just hit the nail on the head. Now, if we take a look at the median price right now, the 225, 3 bedrooms, 1,800 square feet and up. If we take a look on the multiple listing service, it only accounts for 5.6% of the market share. This is the reason why this data is important. If you come to me with a FHA financing, you're at 225. You're looking at a 3-bedroom minimum, 1,800 square feet. There's only 550 properties to choose from.
Wow.
From over 9,000 properties.
Well, let me say this.
Do you see what I'm saying?
That seems like a lot, though, if you're a consumer. Like, man, I got 500 properties to look at. Why is that so not significant?
Well, you have to understand, our consumers are very picky.
Okay. So You're working with like custom style.
Well, this is just average as far as 3 bedrooms, 1,800 square foot, and this includes private sales, bank loans, and short sales, and also auction properties too as well.
Right.
So we got to break this down even further. So private sales is only 4% of overall market share. Short sales is 1.1% of market share, and bank loan properties is only less than half a point. So if you're going out and you are looking to purchase at this price point, the financing consideration, and let's talk about financing consideration. Here's another thing that's very important. If you're FHA, VA, or a cash buyer or conventional, you need to know how many homes out there qualify based upon your price point, because that's going to narrow down your search too as well. Okay? So at $225,500, obviously cash is king, is 100%, but, you know, FHA can still beat out a cash buyer. Okay?
Depending on what they put in for the offer.
Correct. Because the only thing that's enticing today for cash is I can close in 15 days or less. FHA, if the property's going to appraise, I'm willing to give you $5,000 more. Are you willing to wait 15 more days?
Depends on the seller, you know, right? I mean, if the
Who makes $5,000 in 15 more days? Come on now.
Well,
that's a no-brainer.
Here's the deal, though. What if a seller's trying to get out of the state? They're trying. I mean, obviously, some people want.
Well, we still can wire over the funds. Come on now. You don't got to be here to close. Don't even try to debate me with this. Come on.
I'm just giving you a hard time.
I know. Let's move on. Conventional at 225. There's only 519 properties that are available, which is 94%. FHA 432, which is 79%, and VA at 365 properties currently available at 66% of market share. Moving along to condos. Right, condos, the median price right now is $87,500, which is average days on the market is only 30 days. So condos are actually
$87,500.
It dropped from 90.
And that dropped. Why are there so many condos?
I think the reason why is because here's the thing: if you're going to buy into a condo, you need to have that caution.
Okay.
Because on a resale value, you're going to run into trouble. What kind of trouble? Okay. When you're selling a property, think of as a funnel, all your buyers. Because there are so many HOA problems with condos and lenders that won't finance. Now you are narrowing down your buyers. So if you are buying a condo, you need to figure out your exit strategy on a condo because of financing. We run into this problem all the time.
So you're saying if you buy a condo, let's say if you buy it cash, all right,
you would have to sell it to another cash buyer unless you can get financing on that deal.
What? So you're saying because it's hard to get finance buyers into a position to buy a condo, that really the resale part of it. Now, what if things change though? What if now financing becomes easier for condos? Let's say 5 or 10. So at this point,
then that's good. At this point, yes,
yeah,
correct.
At this point, it's a problem.
Correct.
Got it.
But you know, condos are actually a good rental source because our data shows here that condos are at a 26% of market share. So condos are moving good for rentals because if you buy a condo for what, 87,000, your payment's probably like $450, and you're renting it out for $900. I mean, it's good cash flow.
Well, the other thing you got to consider too is when you buy a property that's an investment property, and you're buying it to obviously to rent out, you got to make sure that the HOA company doesn't have any restrictions on that.
Mm-hmm.
And I'm going to tell you that's very important because if they have restrictions on that, you might buy a property and not be able to rent it out.
Correct.
So, I mean, what your purpose is, you might have to move into that property. So it's very important that with a realtor, even me as a lender, if you wanted to say I'm going to buy investment property, I'm going to do the research to make sure that if you're buying a property with an HOA, you don't have that problem.
Now, if you are running into that problem, there's a way around it. We could do a lease to option on the contract, which is now the tenant becomes the owner, and that's how you get away with that problem. So those are the kind of tips and techniques that we do provide to you.
Mr. ITZ with the housing market.
That's right. Moving on to townhomes. 2 bedrooms, 1,400 square feet. The median price today is at $147,500. We've actually dropped a few $1,000s for a townhome.
All right.
Now, if we take a look at townhomes are about 6% of rental market share. Townhomes move pretty quickly for a rental, and they sell a lot quicker than a condo because of the restrictions with financing.
Yes.
Okay.
Very much.
If we take a look at the overall market today, we actually have a total of 9,780 properties, which is we're down by 1% from previous weeks. Private sales, we're at 87%. Short sales, we are at 9%. Bank-owned properties, we are at 3%. It's been like this for the past...
Any big changes?
No big changes at all.
Okay.
The numbers of homes that we sold last week was 420 homes. As far as the inventory, we have about a 6-month supply at this time.
So when you say sold, does that mean when they've recorded with the county?
Correct.
That's not where you sold a property and it's like, well, we got an accepted contract,
Nope.
but you still got 30 days to close. So, right?
No, we're talking about closed. Done deal.
All right.
All right.
Did you say done dizzle?
Done dizzle.
What did you just say?
All right, moving along.
Man, that was 10 years ago.
Whoop-de-doo. What does it all mean, Basil?
Financing consideration. The overall market of 9,780 properties that are currently available. Let's take a look at the financing consideration.
Let's do that.
100% will accept cash.
100% will. Oh, wow. Who would have thought that? I thought it would be 99.5.
Well, it's actually 99.2%, but we're just going to say 100.
Let's just say every person out there,
Yeah.
if you turn down cash, there's a problem, right?
I know. Now, if we take a look at conventional, 94% of the market. FHA, 60% of the market.
All right.
VA, 57% of the market.
And when you're breaking these down, what does that mean?
What this means to a consumer, if we have 100 properties currently available on the market, and you are an FHA buyer, and it's at 61%, that means based upon your financing, you're only qualified for 61 homes.
So out of everything that sold last week, you're saying 94% of those homes sold were through conventional financing.
I haven't gotten to that yet. This is what's currently available on the market for overall inventory of 9,780 homes. Reason why this is important, this is going to put you in the category of how many homes you can qualify for.
Got it.
Are you not paying attention?
I'm sorry, doctor.
Now, to answer your question, for the last 7 days from last week's closing, right, out of the 420 properties, okay, let's take a look at it. 31% were cash closings, which is pretty good.
It's not bad.
Not bad.
Yeah.
We don't want it to be at 60, then we're going to have a problem.
Well, that's what it was, 70%.
That's correct.
Roughly.
Now, conventional, 28%, okay, which is actually down by 1%.
Yep.
VA, well, did I say FHA?
You did say FHA.
Okay, I did. VA is at 19%. The previous week, real quick, was actually at 8%. So last week, we've increased double for the VA buyers.
There you go.
So
that's the highlight. You're a VA buyer out there?
Dude.
Give me a call.
So that means you have a fighting chance to beat out FHA conventional and cash buyers.
I have 3 right now that are VA buyers that from this last week that came in that's going to be approved. 2 of them are in contract.
What's their name and number? Oh, you already got them.
Listen, 2 of them are in contract. One of them's working on it, but I'm going to tell you something. There has been an influx for my business personally for VA financing. There's also a VA streamline. So if you're trying to refinance your VA loan, hey, right now's the time.
Yeah, why wouldn't you take advantage of the VA? Rates are a lot cheaper, aren't they?
They're probably the best loan product that's out there. You got no mortgage insurance. Now, if you refinance, you always got to put in consideration the funding fee, but it's a lot less amount for the funding fee. And I could just tell you, if you have a rate, you know, it might not make sense in every situation because typically you're already getting a good interest rate, especially if you got it within the last 2 to 3 years because rates have been pretty low. I mean, they've been historically low for the last few years.
It seems like there's such a stigma with VA buyers. Like it's hard to get qualified for. You always have to ask for closing costs. I mean, why is that? It's just it's so weird.
The thing is that for a veteran, which you got to understand, they've done something great. We have to give something great in return. They can really pay for most of their closing costs. They have a termite inspection they can't pay for. Really, they can. A lot of times, though, they don't want to.
Yeah.
And the reason why is because I understand they're coming in with no money.
Yeah.
If they can get a situation where they're minimal to no money out of pocket, which we do a lot. I have a lender credit that I give back on anybody that's trying to get a VA loan. That lender credit sometimes takes care of, you know, maybe a third.
How much of that lender credit can you actually get back? It's thousands of dollars?
It depends on the loan amount, and it also depends on the pricing for that specific day and that week. So for me to say it's always going to be $2,000, nobody knows that. But I can tell you that I've credited back up to upwards of $2,500 before. And if you're getting, your closing costs are $5,000, well, if you got a seller paying the other part of it, worst case scenario, you're out $2,500 for your closing costs. But if you have an earnest money deposit that's put down, which most of them do, that money's going to be used for that anyway. So really, you've already kind of put that money in that position in case something doesn't go through. Yeah. So you're good.
Now let's take a look at the rentals. Okay, the overall rentals right now that's currently on the market is 2,631, which is down by 6% from previous weeks. But if we take a look at history for the past 6 to 10 months. The average rentals are at, the rentals is at 3,500, which is down by 25% as far as for inventory. So what does this say here? And why is rentals so important? Well, the reason why we have to look out for rentals is because, if the rental market goes down, that tells you that people are not buying homes. They are renting homes because it's cheaper, because the home pricing are going up.
I agree.
So what's going to happen? If you're thinking about renting, you need to watch out for this. Now, landlords like myself that get this information is now going to increase the monthly payments to meet the standards of the value of the interest rates and the current mortgage payments for a new buyer. So that's how the market fluctuates between buying and selling.
So explain that one more time to our audience. Give me a little bit more insight on that.
So basically, if you're out in the marketplace, you're thinking about buying or renting, and right now renting is cheaper, yes, you can definitely get into a rental property. But what's going to happen is landlords are going to catch on, and because inventory as supply goes lower, then we have demand. Now they're going to increase the rents. Now, as an investor like myself, I look at the interest rates, 3.5%. Okay, on a $200,000 home loan, it's probably, let's just say, $1,100. I'm going to raise my rents to about $1,100. So now I'm getting $1,100, and
so you're competing with the mortgage.
That is correct.
But here's the thing: that's fine. But what most probably don't understand is that you got a tax write-off at the end of the year that really probably lowers your payment by $100.
Correct.
Including tax write-off getting into a home, including building equity. So yeah, that's great. But I can tell you this: rent is always going to have a chance to go up.
It will, and it fluctuates with the current market conditions as far as the mortgage and also the pricing of the home.
Everybody's in a different place. Timing in life is everything, and I can tell you that everybody out there listening to this, or maybe you're not listening, I don't know. I mean, whoever's out there, I can tell you that you have to be in the right place mindset-wise to purchase a home. And everybody has got a different goal. They have different goals that they're trying to achieve. For me, being and knowing what I know about financing versus renting, I would only rent because I have to.
Yeah.
There is no return on anything I put into an asset like renting a home from somebody, which you're paying their mortgage or you're paying their note. Maybe they have it paid off. Maybe they're just pocketing all your money.
The only thing about owning a home is if you're still young, you're not too sure if you're going to be here or not. You probably don't want to do that because it doesn't keep you mobile. That's the only negative thing that I can see for owning a home.
Or if you're somebody that travels, or they have a job that makes you travel where you're not here all the time. Maybe that maybe you're like, hey, I'm not going to enjoy my home enough. But if you're somebody that understands money and the value of it, and the investment part of it, and the return on investment for whatever you put your money into, a house could be anything. You have a chance to get something back in return by purchasing a home and getting a mortgage. This is Dan French with the Market Snapshot. We'll be right back. We got Eli Segall coming up. We're going to give away those movie tickets. And we have a lot of show left. We're going to talk about interest rate trending. We'll be right back. This is Dan French. And welcome back to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to mortgage specialist here in Las Vegas. I'm in studio with ITZ Chakits, Krulsawat.
ITZ.
The doctor, the legend.
The one and only, the king of kings.
You want to go down in the Real Estate Hall of Fame, don't you?
No.
That's what you said you were shooting for. And then what you're going to get up there and say is, you know what? The numbers speak for themselves.
I ain't got to say
What?
What?
Also, we're going to give away movie tickets. We're going to Galaxy Theaters, right? All three of us, we're going to go share popcorn.
I ain't going with you guys. Bunch of dudes.
But a no free stuff for you, right?
Coming in hot with a free stuff giveaway.
Free stuff.
By free stuff, you mean
Free booze and free food.
Hey, that's a good one.
Tell him what he's won, Bob.
All right. We're going to give away movie tickets for 2 to Galaxy Theaters. And, post Valentine's Day. This is good for everybody out there, Maybe you had to work on that day. And now you're like, you know what? This weekend's the weekend. I don't know. I'm just bringing that up. But Robert.
Sir. Yes, sir.
I just want to say Robert Ritina is our producer, and he's done a phenomenal job. How you doing today, Robert?
Hey, hanging in there. Love it. Love being a part of the show. It's a great show.
Yeah, you're making the show. Also, let's go ahead and play that movie quote. You can guess the name and of the movie and the actor. We're going to give away those 2 tickets for Galaxy Theaters through a Groupon. No, I'm just playing. 2 gift cards.
Now, this one's a bit longer, but I think it's funny and it's worth it.
All right, bring it on.
Okay.
Oh, yeah, right. God, I've been looking for that speed dating card. Thank you so much for bringing it to me.
So you actually wrote that one girl looked like she was hurting for a squirtin'?
Mm-hmm. Yeah, hurting for a squirtin'. I wrote that.
Oh, so you wrote hoe for show.
Yeah, I remember that girl. She was a hoe. For show.
Are you allowed to say that on air?
Absolutely.
Oh, okay.
I don't even know what all that meant.
It depends on who your producer is, I think, around here.
Yeah.
So can I say
anybody out there, you want to guess that movie and guess the actor? 702-257-5396. Call in studio and guess it, please. 702-257-5396. Also, I want you to call in with the movie that you think it is, but I also want a good question first, financing or real estate. It's not just call up and say, I'm ready to go. All right? Now, listen, could be a real easy question you ask, but we need something from you. Also, we're going to bring on Eli Segall here in about 22 minutes here. He's going to come on the show. We're going to talk to him. And do you got anything else for housing market?
No, I don't.
All right, let's go right into interest rate trending. So the application news, the number of mortgage applications in the U.S. rose sharply last week. Wow, who would have known that? As interest rates move lower, industry data showed on Wednesday that applications started to go up. In a report, the Mortgage Bankers Association said their mortgage market index, a measure of mortgage loan application volume, increased by a seasonally adjusted 8.2% in the week. That follows a gain of 9.3% in the preceding week. Refinances were up, behind gains increasing 16%. That's a huge increase. That tells me that everybody out there is paying attention to the market. They're paying attention to interest rates. They're paying attention to the show, and they're getting their home refinanced. Chuck, did you get your home refinanced yet?
Well, you just gave me a loan. Can I refinance already?
You got to wait 6 months.
Do you really?
Yeah. The average contract interest rate for 30-year fixed rates were conforming loans, that's 4.17 or less, inched down to 3.83% from 3.91% in the preceding week. Treasury rates fell again last week, and mortgage rates fell to the lowest level in over a year. We talked about that, with rates on jumbo loans dropping to the lowest level since December of 2012.
So nobody's really taking jumbo loans, huh?
No, that means that the rates are getting better. That means that rates are getting... Are you listening to the show, Doctor?
Doctor?
Yeah, Dr. ITZ.
You don't like
rates
it, do you?
Rates are getting better. Everybody out there, no matter what loan program you are at or on with, take a look and see if you can refinance your rate to save you money. Average interest rates for 30-year fixed-rate mortgage loans, 4.17 and under, like we said, fell. And interest rates for loans more than 4.17 fell to 3.74. I have had 4 new refinances, like I talked about, come in. All right? Great opportunity. You can save a lot of money. And some people that felt that maybe they didn't get a chance to do it last year, we're in the same position as last year with rates.
Well, refinancing, what does it cost you to refinance? Like, actually cost out of pocket, cash out of pocket?
There's always cost, but it's half the cost if you were going to purchase a home. You got to have a cost that pays for your, you might have to have appraisal, so you might want to keep money for that.
Yeah.
You're going to have an origination charge, all right? And there's going to be some title fees that you still have to pay for. Now, with all that said, you're probably looking about half the cost of what traditionally. So usually they say it's about 3%. I'm going to say about maybe 1.5% to 2% for closing costs. A lot of times on a conventional loan, we add that back to the loan. That's really the way for you to get out of paying any closing costs.
So you roll that over,
but you're still paying for it. But don't think like you're not. But
I'm talking about cash out of pocket.
Yeah, cash out of pocket. If you're on a conventional loan, I can do it, and you only maybe outside of an appraisal. That's it.
That's pretty cheap.
It's very cheap
to save some money.
Well, and it depends on where you're at.
Yeah.
Obviously, if you're 10 years into it, you might want to consider doing a 15-year versus doing a 30-year because then you're starting over, even though you're saving money. Mm-hmm. But that 15-year note might be the same as your payment now, but you might shave off 5 or 10 years depending on where you're at in interest.
Yeah.
That could be significant. Economic data included the weekly mortgage index, January PPI, January housing starts, January building permits, the January industrial production report, capacity, utilization, and the FOMC January minutes showing a seasonally adjusted increase in mortgage applications. The producer price index, which was PPI for final demand, increased to 0.1%. We also have a 0.5% increase in prices for final demand services, drove the uptick in the PPI for final demand. With the January reading, total PPI is down 0.2% over year, and there's still much room for improvement, yet January readings would seem to have PPI heading in the right direction in the Fed's mind. In January, as a single-family starts dropped to 3.9%, and multi-unit starts fell 3.7%. Single-family starts in the South were flat in January. Otherwise, there were declines in all other regions, which was the Northeast down 14.1%, the West was down 10%, and the Midwest was down 3.8%. The number of housing units under construction at the end of the period stood at 978,000 versus 976,000 at the end of December, and the fourth quarter average was 962,000. This should be a slight positive as it relates to the first quarter gross domestic product computations. Building permits slipped 0.2% to an annualized rate of 1.202 million, and this is all information from January. So you want to take notice of this because as these change and as these unfold, this gives you an idea how construction's moving, gives you an idea about where single-family starts are happening, really where markets are thriving. This is not in just the state of Nevada. It's not happening in Las Vegas. This is happening across the nation. So it's very important to take notice of this. Industrial production increased a robust of 0.9% in January and could have been a little bit stronger if not for a big winter storm in the month. The January reading was much stronger than the briefing consensus estimate of 0.3%. So let's go right into mortgage bonds and where they finished up. Mortgage bond prices finished the week near unchanged, which kept rates in check. Stock strength dominated the expense of mortgage bonds earlier in the week. We saw a slight unwinding to the flight to quality, which pushed rates lower in the prior weeks. As usual, Chuck, the data was mixed.
What does all this mean?
Headline inflation down. Data was in shock. A producer price rose 0.1% versus the expected 0.2%. Housing starts were weaker than expected, as we just talked about. 1,090. It was 1,099. And overall, where do you think the rates ended up?
3.5%.
Flat. Nothing happened. Week to week, nothing happened.
So what does all this mean? I listened to this. I'm like, I can't even keep up. I'm confused.
Here's what you have to look at. We have things coming up, which is the GDP, second estimates, gross domestic product.
Okay. And that affects the interest rates?
That could affect interest rates. Weekly jobless claims. Okay. This is important.
Affects your interest rate.
It could affect rates because of the employment. If the employment comes in higher, this may result in lower rates.
Mm-hmm.
Okay. Why is the new home sales important? Well, it's an important indication of economic strength and credit demand. Weaknesses may lead to lower rates. So getting all this information on where the economy's at, where employment's at, the gross domestic product is at, how the consumer spending is going, all of these things play a major role in how rates are trending and how they will trend for not just this week, but maybe upcoming weeks.
So this information is important because it's going to affect Las Vegas.
Well, everything affects where you live. I mean, it's what I'm telling you is on a whole scale or a big scale with the nation. But if you look at it from Las Vegas standpoint, those other nations do affect, and how our economy and spending is affected here too.
Yeah.
And you just got to realize that as a whole, if you start to see things go the other direction or in a bad situation, the economy starts to go bad, this could lead to us not ever really, and I'll tell you, raising interest rates. And is it important to do that? I think it is. I think the government has said numerous times that they're going to do it. They talked about doing it 3 times this year. Now they're talking about only doing it 2 times because the economy is slowly getting better, but it's still got some concern. You know, you got economic troubles going on globally, and it's just not there. So, again, if you're just tuning in, it's the Market Snapshot with Dan French on KDW and News Talk Radio. I'm here in studio with Chakits, ITZ, Krulsawat from Simply Vegas. You can reach us in studio if you have any questions, financing or real estate, 702-257-5396. Again, that number is 257-5396. I want to talk a little bit about the economy and what your perspective is on the economy. So do you think that this economy here in Las Vegas, you see employment, you see things thriving, do you feel like we're there yet?
I think here in Las Vegas, yes we are. As the amount of construction and things going on, I think we're a healthy economy. But as far as in a whole, I don't think so. I think in the near future, we will be affected based upon what's going on.
I think with interest rates, it's always this this stigma that they're going to raise them, soon. They're going to do it right away, or they're going to start that process. And I don't understand why they come back as far as being the Fed. This is an artificial market, all right? They are controlling what rates are doing to a point. Obviously, the other economic data is giving them ideas about how consumers are spending, how the market is doing. And that stuff's all great and well, but there's still concern. And who knows when this is going to happen, but I don't know if, as much as they say, if we continue to have these issues across seas, import, export, oil, and people continue to put their money into secure instruments to get a slow yield, I do really think that this might turn into not 2 times, maybe 1 time where they're going to raise interest rates, because I know they want to raise them, but is it strong enough for them to do it? And if it happens, rates start to go up, how much urgency is the market going to have for buyers, especially here in Las Vegas, to go out and purchase a home?
I mean, let me ask you this. Do you think rates are going to go up to 6-7%?
Well,
I mean, come on.
I thought they would.
I don't think they ever will.
Who knows? Why? Why would they not? It's like this. If you were out there and you were telling everybody, I'm going to do something that's obviously it's pretty significant, but you're going to do something and you just keep pushing it off. What does that tell you?
All I know is that Wall Street.
What does that tell you? That tells you that you're not a person of your word, if you want to say, or you're not honoring what you explain to them. And if you're somebody like the Fed, which, they're in place really to monitor. I mean, what were they in place for in the beginning? They were really there for what? Taxes, right?
No. They use the taxes to take our money.
But what was their role?
That's the mafia.
Their role was to protect us on war, right? And taxes, right? Correct?
And they control our monetary system.
And they control the monetary system. Now it's gotten to the point that everybody out there is looking for them to help.
Yes.
Everybody out there is looking for them to control things. And you know what? I'm a strong believer in self-leadership. I'm a strong believer in people taking their own in consideration and taking care of their own personal issues. And, I really think that having this much delay and having all this data and all, I think it just needs to take its course and just let it wipe out, start raising rates to gradually.
So you're saying prick the bubble.
Yeah, because this is delaying everything, really. I mean, every time you see economic data, for 2 years I've been pitching it's going to happen where they're going to raise rates. Then it comes back and the data says it's not going to happen. Then it go back and say it is. The problem is you don't have enough evidence, as me, looking and doing a lot of research that I do, talking to the people that I talk to, including you don't have enough data that says they're going to do it. And then every time that they go right up to the point of saying they're going to do it, it doesn't happen.
So what happens if they do raise interest rates? It gets more expensive to buy a home.
I think
what's going to happen to the market?
I think our housing market's going to kind of
crash.
It's not going to crash. It's going to slide, where we're going to have less demand for borrowers coming in. Right now, I can pitch you all day about how cheap money is.
So if I'm listening to this, what you're telling me is, why should I buy now? Maybe I should just wait.
Well, if you're going to buy...
That's where I'm kind of confused.
Buy now because it's cheaper, like I said, with money, how cheap it is, rates how cheap it is, refinance how cheap it is. Who knows if it's going to come back? I thought a year ago it wouldn't come back. And I'm talking about this because I pitched this same thing probably 8-9 months ago about rates are going to go up at some point. Then it came to, I think it was August. Then it came to October. Then I think they meet like 4 times a year to find out if they're going to raise interest rates. And every meeting up until the last meeting in December, they did it. Do I think they're going to do it this year? I think they will, but I think it's not going to happen as people think it is. It's not going to be. And my other consideration is until there is more economic data from that their standpoint, that everybody is slowly, gradually going up, all globally, then they're not going to raise rates, and it's just not going to happen. And I think it could dwindle down to just one, where you might wait all the way until October or December again before we finally see another rate hike.
So, I mean, if we see another rate hike at 25 basis points, I mean, how much more of an interest rate is going to be on your mortgage?
Well,
I mean,
first off, a consumer out there doesn't know what basis points are. All right, a consumer knows the fact that that's mortgage talk, so don't worry about all that. But if it's $1, it's like 25 pennies on the dollar. All right, that's put it in layman terms. Really, why? Because if you're going and you say 25 pennies on the dollar, but basis points, it's not a huge difference. That's not going to change your rate by 1/8 of a point.
Yeah.
When you see swings of 100 to 125 basis points, now we're talking some pricing difference.
Yeah. And I don't see the Feds doing that.
Well, I don't think they want to do it. I think it's, like I said, self-leadership is important, where you have to find out what's best for you and your family and your goals, because if you think that you're just going to, rates are going to always be this way, I don't think that's going to happen. But rates are low enough right now where if you go and you purchase a home and then you wait a year or year and a half and you see rates start to go up, which I think they have to, then I think you're going to be the person that's looking back going, man, I wasted a lot of money on a monthly basis because I didn't pull the trigger at that point. And if you're not ready, you're not ready. But that's why I'm saying this. Nobody knows where rates are going. Nobody understands. I could tell you right now, the refinance, party's back. Everybody's refinancing their home. It's 16% up last week. That's significant. If you're out there and you haven't looked at the idea of refinancing your home, you need to do that. I'm telling you, you're going to save money. But if it does go up, let's say it corrects itself instead of sometimes in things in life, putting your hand too much into something or being a part of too much of something, trying to control things too much, doesn't always work out. And I think you have to blend that. You have to minimize the damages, but at the same time, self-correct the problem. And I think that's what needs to happen, because I could keep giving all this data and I could keep telling you that rates are going to go up, they're going to go up, and then they go back down, and then they go back up, and then they go back down, and they never hit that 7 or 8%. Who knows? But I can tell you, if you put yourself in a good position as a consumer, buying a home, getting money where it's cheap as it is now, it's going to put you in a position maybe to create a lot of wealth down the road. Because
I can't just believe rates are this low. You said about 3.5, somewhere around there hovering.
The problem too, rates, they shouldn't be this low. And it really, it's great that you're putting a lot of people, and it's flocking. Listen, I'm not saying anything bad about it because my business has increased.
Yeah.
My refinance business is actually going really well. But at the same time, you also got to look at the economy as a whole. It's not just about what I'm doing. It's about what are we doing
together.
As a whole. And is it beneficial to keep doing this? Now, I think it is for a period of time, but is it always going to be, like you said, kicking the can down the road and it's never going to recover? It's never going to repair itself. And I think that's the really the question we have to ask ourselves now.
Real estate, what is it, like 7 to 10% of our economy? Because it's not that much, but it does play a big difference, right?
it does play a big difference. Now, I want to say this. Our economy as a whole will affect us here too, because if our consumer goods are not being imported, exported, the oil stays as cheap as it is. We're laying people off for that. You have problems in China. You have problems in Japan. Well, guess what? As a whole, that doesn't give security here. And as there's nobody that's secure as far as our government and how things are being ran here, it's just going to delay everything. So, again, economists are very important to have, to read. But at the end of the day, it seems like there's always a different view from each economist that's out there.
Yeah.
And I think as a person, just like this show, you need to dissect bits and pieces from each thing that you get, maybe from this show, maybe from an economist out there, and then find out what's the best plan of attack for you and your family. Because at the end of the day, I mean, I don't know, the artificial market, having the government so much in play here, I don't know if it's ever going to correct itself. I really don't. And I think maybe at some point, everybody just kind of needs to say, you know what, we need to kind of suck it up, and we're going to have some issues in this area, have some issues in this area, but at the same time, we're going to recover. I mean, we're never going to recover from the debt.
But I can tell you, Vegas is definitely one of the playgrounds to be a investor, because the market constantly shifts, and when the market hits the fan, I mean, when things hit the fan, I'm not going to say what, but Vegas plays a big part. Yep. And it's the only place to go down fast and quick. And that's where you really pull the trigger and start buying up much as properties as you can.
Vegas right now is a great time to buy as an investment, because I could tell you can get a nice return on the money that you're borrowing. It's still low for investment, even though it's a little bit higher in rate.
Now, I do want to say, if you're paying cash, you can get other returns elsewhere. But if you are financing, you're taking advantage and you're leveraging out 80%, there are double-digit returns. We are doing that now. But they're not all out there. There's not a ton of them, but you can find those deals out there.
Predominantly, most of our market is what? Single-family residents, primary residents, homeowners. I get a lot of second home buyers, but it's not a lot. I mean, buying a second home, it's really not buying in the same marketplace as your home is existing. Yeah. It has to be 70 miles out of that radius. And I'm telling you, I have people coming in. Vegas, though, is a very fast-paced, transient city, and you have to be able to adapt.
Correct.
And I think a lot of people come here, some adapt, some don't, and some leave. Usually you have about a year window before you find out if this is a place you want to stay or not.
You make it, you can't make it. That's it.
And in where I grew up in a city that was...
Catton.
It was very slow. I mean, it was nothing really changed. And you know what? That's why I stay in Vegas. That's why I like Vegas, because I like that change. I like to have thriving... a city that I can go at my fingertips and go find something.
And you can feel it when you're here. You're driving down. You're like, I can just feel things growing. I can feel the economy just thriving.
Business is growing. Entrepreneurs are constantly coming here to thrive. There's constantly new businesses coming up. As Las Vegas goes, though, they're doing very well.
Yeah.
I think it's slowly getting better here. And I think if you're buying a home right now, that's why I said it's great to buy a home right now. But if you look at us as a whole and you talk about rates, who knows? Who knows where they're going to go? I just tell everybody out there right now is a good time to buy. It's been consistent over the past few weeks. If you haven't refinanced your home, do it. Talk to somebody about if you can save money or not. Again, it's got to be enough for your savings, but you got to talk to somebody and say, hey, here's where I'm at. Does this make sense? And
call now.
And if you want to do that, you can call us outside studio if you want to have a free, really it's a consultation, but I have a free meeting if you want to call it. We can get together, talk about your personal situation. 702-781-6682. You can give us a call outside studio, and I'd love to sit down and talk with you. Again, we're going to give away these movie tickets that's coming up. We're going to play that movie quote again. Also, I'm going to have Eli Segall coming on from the Las Vegas Sun. It's a beautiful weather out there. You guys give us a call. 702-257-5396 is our direct contact number, financing and real estate. It's Dan French with the Market Snapshot. I'll be right back. And welcome back to the Market Snapshot. This is Dan French from Nova Home Loans, your go-to mortgage specialist here in LV Las Vegas.
Sponsored by Red Bull.
Hey, don't be throwing that out there. Are they paying you behind the scenes? You're getting money, aren't you? You can't be doing that, Chuck. You can't be putting out like that on my radio show. Oh, wait.
Rockstar.
Just playing. In studio, he's the one and only Mr. ITZ.
It's.
Just call him It's. Yes, is Mr. It's in the house.
If somebody
Oh.
I tell you what.
There you go.
If I'm out in the grocery store and somebody walks up to me and says ITZ, you're going to get socked in your gut.
What's a sock? What is a sock? Is that a punch?
I'm just kidding.
Hey, I'm going to tell you something, though. Here's what you got to understand.
Yeah.
We gave a long lecture about interest rate trending. The important part of it is when you listen to other people, maybe on the radio, maybe you just listen to things or read something online, I'm trying to give you insight about what I experience on a daily basis. So the important part of everything I told you is that there's certain pockets, as Chakits ITZ tells me, that are doing well, and other pockets, and that's cities, doing not so well.
Yeah.
Vegas is doing well. So a lot of that information from January was to let you know what, some areas in the economy were doing not so well.
So let's go over this really quickly. What affects the interest rates? Gross domestic products.
Gross domestic product, inflation, employment. I mean, there's just a lot.
Okay.
But these things are good to look at because overall picture, you just want to see during that week, are those going up or down? If they're going up, then you might want to take a look at what rates are doing. And that's important. A lot of times if we're doing better, a lot of times the market or the rates are doing worse. So it's really big. Usually bad news is good news for interest rates, and that's what you got to look at. So long story short, let's go ahead and play that movie quote. And I want to get this back on there. Chuck, do you got any idea what it is? I don't think you're sitting over here just puzzled, but I know you liked what he said. Go ahead and play that movie quote. You know the actor and the movie. You're going to get movie tickets for 2 to Galaxy Theater tickets.
Nice.
But you got to call in with
yeah, right. God, I've been looking for that speed dating card. Thank you so much for bringing it to me.
So you actually wrote that one girl looked like she was hurting for a squirtin'?
Yeah, hurting for a squirtin'. I wrote that.
Oh, so you wrote hoe for show.
Yeah, I remember that girl. She was a hoe. For show.
For show. You know what that means, right? You know what a for show? That means when you go and you watch a show, right?
For show.
For show.
For show.
So go watch that show.
Call now.
Call now.
For show.
Anyways, if you have any questions, financing or real estate, or if you know the movie quote and the actor, and you have a good question, financing or real estate related, give us a call in studio, 702-257-5396. Again, that number is 702-257-5396. I also want to tell everybody out there, you can stream us live, KDWN News Talk Radio. You can go to our website, danfrenchloans.com. Hear that again, danfrenchloans.com. If you go there, I got all past shows. I have good information on if you're purchasing a home, and I got my ugly mug right on the front. And you can take a look at me.
You can read my bio.
Yeah. Dan French, transplant from California. Cotton. Hey, do we got a call on line 1? Eli's here, Mr. Eli Segall from the Las Vegas Sun.
Hey, Dan, how are you?
Oh, man, I bet you're just relaxing. Are you having martinis? It's margarita day tomorrow. You getting ready?
No, I'm not having martinis right now.
No?
Doesn't sound like a bad idea, but I'm not.
Man, it's sunny outside. I'd be at the pool.
He must be at home in bed.
I am
relaxing.
Not in bed, but I am at home.
Yeah? What you doing, man? How you been?
I'm good. How are you guys?
Good.
Well, we're thriving. Las Vegas has got a lot of good education today, and we're going to talk about that again or a little bit more with you. And so it's been a while. You always put out good articles, and I hope somebody's out there contacting you about some of the information you put out there. First off, Eli, we talked about reports suggest Las Vegas housing market will hold its course in 2016. And what is your expectation? Are we going to just keep rates and everything's going to kind of keep on this even keel here?
Obviously it's really impossible to say how a year is going to turn out because you just never know what's going to happen with the economy or with the presidential race or, especially, particularly obviously this year because that's an issue, or with interest rates or whatever. But, the story that we had recently was that if January is any indication at all, is that it basically left off where it basically started where the market left off last year, which is that you're seeing higher prices, fewer purchases, and frankly, a lot of overreaching sellers, people asking too much or listing too high or listing too many houses and like more than the market can handle and that kind of thing. So that's basically what we saw in January, and frankly, it wasn't a whole lot different than what Vegas has seen, and Vegas saw in 2015 and for a lot of 2014 also.
So going back a year, I don't know if you know this, but I'm pretty confident you're up to date on most of history and in the housing market. You do a lot of articles on the housing market here in Las Vegas. You go back to January of 2015, and historically we thought rates would never get lower or they would never be back here. They started to go up. Now they're back here again. So is that going to stay on course with the same, moving in 2016?
You mean, will interest rates will they move higher? Is that what you're asking?
Well, I think is the overall market going to keep consistent on, building? They're going to keep consistent on developing new, home development? Is the rates going to consistently, not saying that you got any, thought on that, but I mean, rates are back to where they were at a year ago. I mean, is it confidence? Is there not a lot of confidence in the market yet to start doing and raising rates, and maybe they don't have enough confidence where the consumer, is going to be in the market to buy a home, and if they raise them, then obviously we're going to have a problem.
I think that plays a factor. I don't know how big a factor, but I have to imagine it plays a big factor. Basically, people's confidence in the housing market, just generally across the country, but definitely here in Vegas. I mean, you still have, it's still an issue out here where you have people who either don't qualify for a mortgage, or the mortgages that they do qualify for, they're really high interest rates. There was a study, and this stems from the housing crisis where you had so many foreclosures and bankruptcies and short sales. Now, obviously, it's not nearly as bad as it was 3 or 4 years ago because banks kind of put a big red X over you for 6 or 7 years in some cases if you've had any of those 3 situations until they're, after 6 or 7 years, then they're willing to give you another mortgage loan. And so 3 or 4 years ago, you had a lot of people out here who wouldn't qualify. But I think that's probably lessening right now. But I think what's interesting that you're seeing is that you are seeing more. You are seeing lending out here. Obviously, it's not dead or anything like that. I mean, there are people getting loans, people are refinancing and whatnot. But there was an interesting study that came out about a month ago from a group out of D.C. called the Corporation for Financial Education, I think is what it is. I'm probably botching the name, but it's a nonprofit group out of D.C., and what they found was that Nevada has the highest rate in the country of people who get high-cost mortgages. Now, they didn't explain why. They didn't go into any of their reasoning for that or what they think is behind that, but I have to, for me, the way I interpreted that is that it shows that, Vegas in particular, because, Vegas is most of Nevada's population, is that Vegas is still a high-risk place in a lot of cases for mortgage lenders. So they'll give you money, but it's not going to be cheap.
Yeah, I know exactly what you're talking about. It's kind of like it's hard money, really, is what that's called. Yeah. And what that is basically you're going to an individual party to try to get financing at a higher interest rate, and it's disclosed, but a lot of people have to go through that because they don't have any options after doing, a short sale foreclosure or something, bankruptcy, that a significant credit impact that's happened. Maybe that's what's contributing here.
I definitely think it is, absolutely, because, Vegas, you guys know all too well, Vegas was one of the hardest hit areas in the country, and it just takes a long, it will recover, I'm sure, eventually, but it just takes a long time. This isn't something that's going to happen overnight or even in 5 years or maybe even 10 years. It was that bad out here. I only moved here in 2012, but from everything I've read and heard and from what people have told me, when you look at the stats and you talk to, real estate agents and developers and homeowners, it was just awful. And so it just takes a long time to get over that.
Yeah.
Let me ask you this. Do you think there's a lot of development that's going on out here? Do you think we're growing too fast based upon where we're at today?
I'm not really sure. I hear it both ways, because there are still a lot of vacant houses out in Vegas. You've got, last report I saw was from Realty Track. They estimated that there are about just under 14,000 vacant houses in Vegas. Now, it's tough to say how many of those are abandoned, but I think a lot of them are abandoned. And so you still have that issue out there, and yet at the same time you see construction going on. But if you put it in context, it's really interesting. There's a researcher in town. He's been here a long time, Dennis Smith. He runs home builders research, and he's the real guru on all this stuff and anything that has to do with home construction. And his stats show that last year in 2015, I think there were about 6,800 new homes in Clark County that were sold. Just about 6,800. That was up from 2014, but 2014 was also kind of a lousy year. But it's interesting, though, back in 95, which was still, this was 7 or 8 years before the crazy bubble, before the craziness of the 03 to 06 bubble really even started. There were about 19,000 new homes that got sold in Vegas that year. That was in 95. And then that, skyrocketed to about 39,000 at the peak of the bubble, and then it went down to like 4,000 at the bottom of the recession. So right now about 6,800. It's still definitely more than what it was 3 or 4 years ago, but it still doesn't even come close to what builders were doing out here in the 90s. So now, also at the same time, there's not as much land out there. I mean, there's still a lot of land in Vegas, don't get me wrong, but not as much as there used to be. So there aren't as many places to build in theory, but I think if the market were stronger and people's finances were better, I think you'd see a lot more new homes being sold, definitely. So I don't know. I'm not sure if I really answered your question, but so in some ways, yeah, Vegas is still growing fast, but compared to prior years, even 20 years ago, I mean, it really does. It still doesn't even come close.
I was going to say, too, you said there's a lot of inventory that has vacant homes. Is that still going on? I mean, how many vacant homes do we have out there still? I thought it was starting to dwindle because foreclosure process was really starting to come on.
It is, yeah. No, you're absolutely right. It is starting to go down. I mean, the one company I know that really tracks this, and I don't even think this is. I mean, it's like with anything with real estate stats. Nothing is an exact science. You're never going to get exactly what is out there 100% of the time, every time.
Absolutely.
But according to Realty Track, and they track this based on Postal Service data. If a carrier reports that a home is no longer receiving mail or something to that effect, they put it at right around just under 14,000, and that's down from about 16,000 back in the fall of last year. So it is going down, and you're right. I think it's mostly because a lot of these homes that have been sitting vacant because banks weren't foreclosing on them, and so now they are starting to foreclose. They're starting to clear out that pipeline, and they're starting to actually repossess houses and list them for sale, and they're probably selling some of them too. So I think that's probably chopping that number down a little bit, but it's still really high. I mean, Vegas, I think, according to Realty Track, it's about just over 2% of all homes in the Valley are empty, and I think nationally it's around 1.5%. So we're still, it's a lot higher than the national average, that's for sure, but it is improving, definitely.
That is interesting that you said that, because the other day I went to the title company to pull. I noticed a default. There's over a little bit less than 22,000 homes that are people late, 90 days late.
Wow, that's a lot.
That is a lot. And the other thing is that we have all these new master plan communities that are coming up, especially in the Northwest. And I know that you wrote an article on it, which was, I believe it was, what was it, like the Paradise West and Paradise East?
Park Highlands.
Oh, Park Highlands. There you go. There you go. And what's going on with that? Because, apparently they're about to break ground on one of the phases here.
Yeah, they are. I haven't talked to those developers since I did that story, so I'm not sure exactly what's going on right now. But I did see a news release came out a couple of weeks ago or a week or so ago that they're holding a groundbreaking, and it's interesting because that project to me kind of typified North Las Vegas, and their quest to be a big big boy city, if you will. I mean, they had it was just a huge project. I think it was how many acres? I mean, it was 6,000, 5,000. I mean, it was huge.
Yeah.
And it was planned for a huge number of homes. I don't remember the stats off the top of my head, but the whole thing went bankrupt twice before a single house was even built. And then what happened was you had one of the big problems with Park Highlands too is that you've had so many different landowners come and go. And, you look at Summerlin, and you basically have one company that controls the development of the entire community, which is the Howard Hughes Corporation. Mm-hmm. And in Park Highlands, I mean, when I did that story, I think I counted maybe a dozen or so different groups that own land within the project. So that's really tough to coordinate everybody, because everybody might have different goals or different timelines or, different financial strengths and weaknesses. And I mean, it makes kind of a mess of things. And then you have egos involved and who wants to do what, this or that. And so it really kind of slows things down. And so that was a big problem. But obviously the recession was a huge problem with Park Highlands. And so the whole thing went bust. North Las Vegas was growing really fast, and then they absolutely got hammered. I mean, almost probably worse than any city in the valley of Vegas, Henderson, and North Las Vegas. I think North Vegas probably got hit the worst. I mean, they had at one point like 8 out of 10 homeowners out there were underwater. The city's bonds fell to junk status. They had to declare a fiscal emergency for the city government. The whole city almost got taken over by the state. I mean, it was just an absolute mess out there. And Park Highlands to me always kind of typified that. Just the appetite for growth, and then just how it just completely backfired on them. But yeah, they are, they've got new ownership over there, and also the project's basically been split into two. And so you've got two separate groups that are doing two completely separate projects that have nothing to do with each other. And so there isn't even really a Park Highlands anymore. I think it's the Villages at Tule Springs is what's actually going to have the groundbreaking, and that's the majority of what used to be Park Highlands. They've got maybe 70 or to 80% of the land of what used to be the whole Park Highlands. And so that's who's breaking ground. And I mean, I hope they do well. It's definitely been caught up in a legal mess, and with all the bankruptcies, and it just was an absolute financial disaster for a while. So it's good to see that they're actually doing stuff.
So Eli, I got to say something about this. So you have a lot of good knowledge here, and as far as where the market's at, as a consumer, what questions I get a lot, and I think Chuck gets a lot, is I'm renting right now with all this development and everything we talk about on this show about how the economy is doing well here in Las Vegas. In 2016, if I had somebody say, I'm thinking about buying a home versus renting, and I'm going to tell them it's probably going to be beneficial for you, mostly you got to look and see what their goals are. But as a whole, confidently, can I say in 2016, this is going to get better? It's going to stay the same as far as we're going to constantly see, building going on. Residential market's still going to keep thriving. Economy's going to do well. Jobs are going to do well. So overall, it's a good time to buy. And do you see this going on all the way to the end of this year?
I mean, it's tough to say. I think, it was interesting. Like back in 2014, you did see the economy. It had already started to improve. Visitor levels were rising again. Consumer spending was rising again, although that's not necessarily a good thing, because if you're just maxing out your credit cards, that doesn't really help.
Right.
But so there were, the unemployment rate was going down in 2014. But then there were some changes with with FHA loans and how much they'll guarantee on a mortgage, and then that combined with rising interest rates, and so new home sales went down like 20% in 2014 in Vegas, even though the economy was on the mend at that point. So it's really tough to say. I mean, you always hope for the best, and you want to see companies do well, and you want to see people individually do well, but it's so difficult to predict. I mean, it's impossible, really.
So moving forward, let's talk about one other thing I wanted to discuss with you. I know you don't have the numbers or the full numbers, but you also did a lot on you do a lot on short sales, and do you know a little bit about what's going on with the short sale market, and is that ever going to come back, or is that pretty much, because there's still a lot of homes underwater? But
tons. There's still plenty of opportunities for short sales. I mean, I think according to Zillow, which is one of the bigger companies that tracks underwater rates, Vegas still has the highest rate of underwater mortgages of any big city in the country. It's just around 20%, maybe just a little over, maybe around 22% of all homeowners are upside down. Now that's, like I said, it's still the highest in the country, but it's down from about 70% in the beginning of 2012. So it's gotten a lot better, and that's really just entirely because home values have gone up and it's helped people escape that upside down status. But overall, short sales are back to being a very small portion of the market. I know back in 2012, 2013, something like that, short sales were around 40 to 45% of all resales in Vegas, which is just kind of a staggering thing to think about. But now it's down to, I want to say 10 to 12%, something like that, maybe even less. So it's definitely gone down. It doesn't dominate or control the market like it did a couple years ago. Not even close. So yeah, there are still short sales out there. Definitely, it's still a big chunk of the market, probably bigger than in other cities, but it's not nearly as big as it used to be out here.
Why do you think the owners of the properties that are down, why are they not liquidating their liabilities?
I think because being underwater isn't necessarily a bad thing. It doesn't mean that your finances are in ruins or anything like that. It just means that your house has gone down in value. Now, you might still be able to make your payments every month, and so you're not delinquent, your credit's still fine, but you're just underwater. But if you're going to stay there and you're going to live in that house for 20 years and you really don't plan to leave, I don't think it really matters. It really only matters when it comes time to sell. And once you're ready to sell, if you're above water, hey, that's great. But if you're underwater but you're not planning to leave, I don't think it really matters that much. I think people rightly and understandably get worried when they're underwater because if they have a new job or whatever, their spouse gets a job in another city and they have to move unexpectedly, then they might take a loss on a sale of the house. So nobody wants to be underwater, but again, it's not really a problem if you're not planning to leave anytime soon.
In case you're just tuning in, it's Eli Segall from the Las Vegas Sun here on the Market Snapshot. We're talking to him about short sales and what I wanted to say about the short sale process, including what we just spoke about. You're right. I think there's a stigma or some type of
there's a definite stigma, I think.
Yeah, it's a thought out there that you have an underwater home, so you have a problem, and why are you doing that when you can rent or you can get out of it? But again, if you're that person that you're not really looking for a return on investment, you're not you like your home, you're maybe somebody that just is comfortable.
Yeah.
That doesn't mean you have to leave the property. And I think everybody out there is pushing, go short sale, you're upside down. Again, you always get into something to try to get a return on it, but in certain situations and a lot of situations, maybe in this 22% that you said roughly that's left over, maybe they want to stay in their house or they're not in a strong urgency to move.
Yeah, that could very well be the case. Now, Vegas is also a really transient place, and so a lot of those people probably do want to leave at some point.
Yeah.
So there's always that. But, again, if you've got a stable job and you've got your family out here and things are going well and you're underwater, I'm not sure it really matters.
The other thing you got to consider, Eli, is there's a lot of good things that happen when you do short sale. They got the Debt Relief Act. I think that was extended, till this year?
Yep, the end of this year.
So that's going on. That could go away. They do have relocation money if you're trying to get out of that property and relocate. So there's some perks and benefits to doing it, but maybe those are not high enough on the food chain, if you want to say, to get out of that property.
Yeah, I'm sure for tax reasons a lot of people do it just to write off that portion that they were underwater, but under the Mortgage Debt Forgiveness Act. But yeah, it's up to. Every situation is different, so.
Other than that, what do you got going on today? Anything good?
Oh, boy. Just running errands, cleaning the house.
Yeah.
Sounds like a Sunday.
Around, so.
Man, it sounds like my...
Same as you guys, so.
Yeah, Sunday at my house, the same as, man. You want to say thank you for coming on. You always give us some good information. It's Eli Segall from the Las Vegas Sun. Eli, how can they get a hold of you if they had a question to ask?
They can always, anyone, readers can always email. They can go to our website. Our website is lasvegassun.com. It's all one word. If you want to check out our business page, it's vegasinc.com. It's with a C. Or people can always email me. It's Eli .Segall, which is Segall at lasvegassun.com.
Do you have any Facebook account or a Twitter account?
I've got a Twitter handle. Yeah, it's just Eli_Segall.
I'm gonna throw a shout out to you.
Cool. Yeah, I post all my stories and other stories that other reporters at the Sun write on there. So
see,
get some good articles over there.
Eli Segall from the Las Vegas Sun. Thank you again for taking time out of your Sunday and making us smarter than what we are, right, Chuck?
That's right.
And we'll have him back here again, maybe down the road, and definitely we'll have him back on. Probably, we'll give you a few weeks. We'll have you back on here, Eli.
Sounds good. Thanks a lot, guys.
All right, have a good Sunday, Eli.
All right, bye.
All right, you too. Take it easy.
All right, Eli Segall. So, yeah, it's good information. I think it's you always want to give up-to-date information. But like he said, I was going to tell you something. None of this that we tell is 100% accurate. It's all it's accurate in the sense that we're giving you the content.
Yeah.
But everybody's going to have a different take, and there's going to be different numbers slightly.
Yeah.
And you're not always going to be
skewed a little bit.
Yeah, it's skewed, and it's not going to be concrete with everything that happens. But overall, you got to run with it on the picture of what market's doing here in Las Vegas, what interest rates are doing, where we're heading in this year, where the market's heading as far as development, and also the economy as a whole. And I think we try to wrap all that up into a show. Hopefully, we're giving out good content and good information for you. Take bits and pieces of this. You go out and you
make your own determination.
Yeah, you make your own determination. That's why we put this show together. Again, the reason why we try to put this show together is make you smarter home buyers and smarter home shoppers. This is Dan French with the Market Snapshot here with Chakits ITZ, and we'll talk to you next week.